So we are doing a sum of October, November 22, paper 21. The sum is for depreciation. And we are asked to make the asset account which is at cost. Apart from this, we are asked to make the provision for depreciation of the asset account. And your asset is delivery vehicle, correct? And the third thing that you're asked to make is the asset disposal account. So three accounts you're asked to make: asset account, the provision for depreciation account, and asset disposal account. Do you remember the rule for asset disposal account?
Yeah, whatever comes in as at cost and whatever. No, that's for
So the cost will be here of the asset that you're disposing.
yeah.
The accumulated depreciation will be here of the asset that you're disposing.
Yeah.
What else?
Then the profit or loss.
The provision for then if you're part exchanging any vehicle, the cost of that part exchange vehicle will be here. Okay. And if you're receiving cash, the selling price of the vehicle, that will be here. Are you with me? In the normal sums without the part exchange, the cost of the vehicle comes on this side, the selling price comes this side, accumulated depreciation comes this side, and then you calculate profit or loss. If it's a profit on sale of vehicle, so it will come over here, right?
Yeah.
And if it is a loss on sale, it will come over here. Income statement. Can you give me the rule for your asset account?
Whatever comes in is at cost and whatever goes out is at cost.
Okay.
So the balance is on the debit side. Then if you dispose anything, it'll be on the credit side.
So whatever comes in will be at cost, whatever goes out will be at cost. Okay, what is the rule for provision for depreciation account?
It has a credit balance.
Okay.
And disposal will be shown on the debit side.
So the balance begin down will be over here. Then if it's the disposal will be here. That is the accumulated depreciation of assets sold. Depreciation is on month by month basis. That means you have to calculate depreciation of assets sold up to date of sales. Then you will have the current year depreciation. Is this clear?
Yeah.
Just keeping all of this in mind, we will start. Can you read the question for me?
Bharti owns a small business. The following information was extracted from her accounting records. On 1st October 2021, Bharti purchased a new delivery vehicle costing $26,000.
I cannot hear you properly, okay?
Okay, wait.
And another thing over here is whenever you're doing a sum of depreciation, the start of the year and end of the year is very important for you because this is month by month basis.
Okay.
So what is the start of the year?
1st July 2021.
So the start of the year is July 1. What is the end of the year?
30th June 2022.
So 30th June. So July to June is the start and end. Okay. So this is the thing. You have cost and accumulated depreciation. Where will you write this?
The cost you'll write on the debit side of the vehicle account. And then the provision for depreciation you'll write on the credit side of the provision for depreciation account.
With me? So this is the balance. Then you have an extract of your asset register. That means you have two vehicles. One was purchased on July 1 and the other was purchased in 2019. Other was purchased in 20. So the total is coming up to how much? 52,000. This is your breakup. Yeah?
Yeah.
Now, on 1st October 21, that means in the year 21-22, a new vehicle was purchased, DB3, for 26,000. Come on, tell me, what will you do of this new vehicle that you purchased for 26,000?
So 26,000, you will wait. 14,500 you will put as bank in the vehicle account.
So this 26,000 should appear on the debit side of your asset account.
Yeah.
Okay? This 26,000 should appear on the debit side of your asset account. If you have paid money, then you will write bank. If you have taken a loan, then from where you've taken the loan, you will write. And if you have part exchange your asset, then you will write disposal. Yes?
Yeah.
So what you have done?
You have part exchanged it.
You have paid 14,500 by check and the balance was settled by part exchange. Now you have exchanged your vehicle, part exchange of the old delivery vehicle 1. So how much have you exchanged? Part exchange value is how much?
It is 11,500.
How did you get that?
I did 26,000 minus 14,500.
So your delivery vehicle 3 was for 26,000. For that you have paid how much? 14,500. That means the balance is the selling price of old vehicle. How much is the selling price of old vehicle?
The selling price. It's
26,000 minus
11,500.
11,500 is the value for which you have sold your old vehicle. DV1. Yeah? There is no loan. All this has happened on what date?
This has happened on 1st October 2021.
So disposal will happen on the 1st of October 2021. Okay. So now let's talk about disposal. Vehicle that was costing how much?
26,000.
No, darling.
Vehicle was costing,
right?
yeah, so DV1,
18,000.
18,000.
18,000 is the cost of the asset that is disposed. Disposal has happened on October 1. So 18,000 is the cost of the asset that is disposed.
Yeah, so you come on the debit side.
It is disposed. It is disposed for how much?
11,500.
It is disposed for 11,500. Yeah. Now I need to know the accumulated depreciation on the asset disposed so that I can get profit or loss. Yes?
Yeah.
Okay, of the asset disposed. So we are talking about the asset that is disposed on 1st October. Asset costing how much?
18,000.
So asset costing 18,000 was disposed for 11,500. I have not received any cash. It is just a part exchange, right? Okay. So an asset is depreciated on month by month basis. So cost of the asset is how much? 18,000.
Yeah.
Useful life is 5. Depreciation per year is how much?
Be 3,600.
3,600 is a depreciation per annum. And if I talk per month, it will be how much?
It'll be 300 per month.
300 because it's straight line method, right?
Yeah.
July to June is my year end. So the asset was purchased in 1920. Then you had 20 and 21, and here I am in the year 21, 22.
Oh, so 3 years depreciation you have to charge.
Are you with me?
Yeah.
So asset was of 18,000. Depreciation for the first full year 3,600. 14,400 is the net book value. 14,400 is the net book value. Second year again 3,600 depreciation. 10,800 net book value. Yeah.
Yeah.
I have sold in 21, 22.
Yeah.
October. So July, August, September, and on 1st October I have sold, right?
Yeah.
So 3 months of depreciation. So 300 into 3, 900 depreciation. This is depreciation for the current year. Yes?
Yeah.
What is the accumulated depreciation? 3,600 plus 3,600 plus 900. 8,100 is the accumulated depreciation. What is the net book value of the asset sold? 9,900.
9,900.
So asset costing 18,000, disposed for 11,500. Net book value of the asset sold is 9,900. Accumulated depreciation of the asset sold is 8,100, and depreciation of the current year for the asset sold is 900. Correct?
Yeah.
Come on, let's incorporate this information. Delivery vehicle at cost is already incorporated, right? Come on. Let's talk about provision for depreciation. Accumulated depreciation of the asset sold up till the date of sales. Accumulated depreciation of the assets sold up till the date of sales will come over here. How much?
Will be
8,100.
how much? 8,100.
Yeah.
In the disposal account or in the provision for? Acha, okay.
Both the places.
Both the places will come, yeah.
8,100 accumulated depreciation of the assets sold. I will remove from here and I will put over here. So here debit, here credit. With me?
Yeah.
Depreciation of the current year of the assets sold.
It's 900.
900. Okay.
Yeah.
Done. Provision for depreciation of the asset sold.
Yeah.
Now profit or loss on the disposal of the asset.
So you don't need to find the depreciation on the remaining assets that are left.
Right now I'm just finishing of the disposed asset, right?
Acha, okay. Yeah.
Asset which had a carrying value of how much? 9,900.
Yeah.
Carrying value of 9,900. How do you get the carrying value? Cost minus accumulated depreciation.
Yeah.
1,000 minus 8,100.
9,900.
9,900 was disposed for 11,500. So profit on the disposal of asset is 1,600. Profit on disposal is 1,600. I finish my disposal. Yes.
Yeah.
It will go to the income statement and everything will be prepared on October 1. Are you with me?
Yeah.
Now provision for depreciation. Yeah,
Yeah.
this is the asset sold for the current year. Now I have to find out depreciation of the remaining assets. Yes, are you with me?
Yeah.
Close the delivery vehicle account. What is the total of the debit side?
78,000.
Balance closed down.
60,000.
Now it's month by month basis, so I need to be very careful. Yeah?
Yeah.
Since it's month by month basis, I need to be very careful. I want to chart depreciation for 21-22. DB1 has already gone away.
Yeah.
DB2 is 34,000.
And then we have DB3 ka to we're done.
So 34,000 divided by 5. So depreciation per year for DB2 is 6,800. And DB3 is how much? It is for 26,000.
Yeah.
Purchased on October 1.
Yeah.
So depreciation will be for how many months?
10 months.
October, November, December, Jan, Feb, March, April, May, June. 9 months.
Oh, July na? Acha, July is first. Okay.
So 26,000 divided by 5 into 9 divided by 12.
So it is 3,900.
So total depreciation will be 6,800 plus 3,900. It is 10,700.
Yeah.
Yes.
Hmm.
Are you sure?
Yeah. And then you have to add the 900 also.
So income statement 10,700. This is on the last date, that is June 30th. That is depreciation for the current year. Depreciation for current year on your remaining assets. So we'll close your provision for depreciation account. Which side total is more?
The credit side.
It's how much?
It's 25,600.
So you'll have your balance closed down. And you will have your balance begin down, 17,500. So with this, we have completed nothing else, right? There is, can you give me the theory answer? Read the question and give me the answer.
State one reason why non-current assets are depreciated with reference to an appropriate accounting concept.
Tell me.
As the principle of prudence states that profits and assets should not be overstated, so the assets are supposed to be depreciated according to that.
Profits should not be overstated and assets should be shown at a realistic value.
Yeah.
Difference between a capital expenditure and a revenue expenditure.
Capital expenditure happens on a recurring basis and doesn't happen on a recurring basis, and revenue expenditure happens on a recurring basis.
Okay, fine. One example of a capital receipt.
Or sale of machinery.
And revenue receipt.
Rent received.
Okay. So with this we complete October, November 22, paper 21, question number 2, which is related to depreciation. Okay.